Good morning, everybody. We'll give this just a few more minutes to have everyone join, and we'll get started. Let's give it 2 more minutes. One more minute, and we'll get started. It looks like we're coming close to capacity, anyways. All right. Good morning, everybody. Thank you for taking the time out of your day to join us for this employee retention credit update. Hopefully, everyone will find it informative and interesting. This is still pretty fluid, but I think we have enough information and guidance to at least get things going for 2020 if you're eligible, and then prepare you for 2021. And if you're in a particular situation, actually have you apply. My name is Sal Cura. I am partner at Capita, and I'm in charge of the accounting and assurance department. Quick overview of today's meeting. We're going to just talk about what the retention credit is, and then really much determine eligibility. We'll do a recap. We'll talk about the tax reporting, some advanced considerations, the next step, and then we'll have some Q&A. There's some Q&A opportunities in here. If I get multiple, of the same questions, I will try to answer them as we go, if that's something I can do. All right, so the employee retention credit, this has changed a little bit for 2020 in December when they passed the latest stimulus package, in the sense that you can now have received a PPP loan, a PPP-1 loan, and still get a retention credit for 2020. That's the biggest thing here. Before, when you couldn't do both, it really kind of made it almost impossible for most of you to get it, because most people did take advantage of obtaining the PPP-1. In PPP-2 situation and the employee retention credit in 2021, that's also, you can get both. The rules for 2021 are much more relaxed and will allow eligibility for a lot more people, and we'll get into that. So let's jump in. So this is basically a refundable payroll tax credit based on qualified wages. As part of the CARES Act, that was in 2020, but again, before you couldn't get it if you got PPP funds. So it left a lot of people out. The eligibility for this, depending if you're a large or small employer, and we'll get what defines that in a little bit. You can talk about government shutdowns, reduction of gross receipts depending on the year, and we'll figure out eligibility hopefully for everybody on this call. It should be pretty simple to do that. Biggest thing is just to have your accounting records properly shored up. So what is the value of the credit in 2020? And this is the one where you have to amend your 941s because you should have filed those already. You can get up to $5,000 per employee for the year 2020. That might not sound like much, but if you got 20, 30, 40 employees throughout the year, it can add up pretty quickly. And basically it's 50% of qualified wages up to $10,000. So if you had somebody that you paid $9,000 to, your most credit for that individual would be $4,500. If you paid someone $100,000, your most credit would be $5,000. So it is caps off at $10,000 of wages per employee for the year. And that's why it's not that difficult to have this work with the PPP, because most people will make, $30,000 even if they're at minimum wage. Now here's the value in 2021. This is a huge jump. Now we're looking at 70% of the wages of $10,000, but rather than per year, it's per quarter. So now we're looking at $28,000 of credit per employee for 2021. This just got changed because they were only going to extend this to the first 2 quarters of 2021. Now it's for the year. Now it's not easy to qualify, but it's not. Hopefully you don't qualify because that means your business wasn't impacted, right? But if it was, I think depending on where you fall, this should make up for that revenue impact. So who's eligible? For 2020 and 2021, the rules are a little bit different from with respect to percentages of the decline in gross receipts. But the top piece where operations were fully or partially suspended as a result of the government order. These rules get a little bit tricky, and we'll jump into those. But basically, the long and short of it is, if you had to shut down, if you couldn't do maybe indoor dining or outdoor dining for that matter, that's pretty much a little bit of a partial shutdown. If you're a restaurant, you were just to-go orders only. If you were maybe a movie theater, maybe a museum, those are all shutdowns that allow you to get this credit. There's a lot of other credits that are going on or are being discussed about for restaurants and theaters and so forth. But this credit here is pretty it's a pretty good credit that I think everyone should investigate at least. I know a lot of our clients do have multiple restaurants, and they're looking at the stuff that's talking with the revenue differences that are going to come out. But I think at minimum, let's do all the calculations to see if you're eligible for this, and then you can make the decision. There's no rush for this, and we'll get into the timing of this employee retention credit here in a little bit. But there is no rush. You have 3 years to apply for this. So we'll go through some charts here. So was your business suspended? No. Then you got to jump into, did you have a decline in significant, in gross receipts? In 2020, that number is pretty hard. That hurdle is 50% is where you kick off in any given quarter. And then you continue to get this credit or eligible for the qualified wages until your revenue is above less than 20%. So we'll go through some details. When we talk about large and small employers here, I'll get to the detail, but just anybody who's under 100 employees, either if it's 2020 or 2021, you fall under a small employer. If you have over 100 employees in 2020, you're considered small. In 2021, you would be considered a large employer. But for most of us who are under 100, for both years, you should be fine as consider a small employer. So the suspension of operations, this is again kind of very facts and circumstances specific. Who asked for you to shut down? Was it local government? Was it the city? And did you follow those rules? And how did it affect your business? So certain restaurants that I know, certain restaurants who did have to stop outdoor dining and indoor dining, but still had to go open, actually did better. Their revenues were up. It's pretty shocking. So even though they had a suspension of operations, they technically wouldn't be eligible. You still had to have a reduction in revenue. Now the rules for that are a little bit blurry, but you still had to have a reduction in revenue. Now, if you didn't have a suspension, but let me just get back on the suspension. The partial suspension, A2, is reduced operating hours, and so forth. That would impact, consider a suspension. So if you were normally open till 10 p.m. and you had to close at 6, that's effectively shaving off 4 hours of operations. That would be considered suspension. If you had some stuff that affected your supply chain, that could effectively be a suspension. So this is, again, you kind of have to dive into the rules, and this is a little more specific. But if the easier way, if you fall into this bucket, that I think most people will, is a significant decline in gross receipts. If you had a decline in gross receipts in 2020 of over 50% in any given quarter, you're going to qualify. And these gross receipts, like this decline, doesn't have to be COVID related, but I imagine it would be. But there is no rule that says you have to certify that this was COVID related. Your gross receipts do include income, dividend, rents, royalties. It pretty much includes everything in the gross receipts portion. But again, if you had a 50% decline in any given quarter, the clock effectively starts for figuring out your qualified wages up until the quarter after your gross receipts have declined less than 20%. And we'll run into some examples in a second. So here's again a little bit of a synopsis of what I just said. Gross receipts in 2020 calendar quarter are less than 50% of the same calendar quarter in 2019. You effectively become eligible the first day of that quarter that was met. It's not, even though you might not realize when you qualify, it does go for the first day of that quarter, and you stay eligible up until the first day of the following quarter when gross receipts are more than 80% in the same quarter of 2019. Now for 2020, that's a lot easier. It's only a 20% drop. So you don't need the 50% drop in one quarter to get you started. If you have one quarter that's down 20%, your time clock started where you have wages that are qualified. And again, 2020 is a lot more generous because you're getting $7,000 potentially per employee per quarter versus $5,000 per employee for the whole year in 2020. So again, keep this in mind when you're doing your books. Now, there's certain instances where you can use the prior quarter to do the calculation, but I don't think most people need to do that. But we can, if you have questions on that, that can be discussed. So were you a large or small employer? Now, like I said earlier, and I'm going to read these qualifications for you right now. A large employer in 2020 would be anyone with over 100, and in 2021, over 500. A small employer in 2020 is 100 or fewer, and in 2021, 500 or fewer. And they're only going off of what a full-time employee was in 2019. It's not what you have in 2021 or 2020. It's the number of full-time employees you had in 2019 that will show, put you in the bracket that you're in. Again, a full-time employee, and the way they're counting this is someone who averaged 30 or more hours per week or 130 hours of service per month. The average for the year. This is just math. You add the number of full-time employees each month and divide that by the number of months. And I'll let you guys look at this slide for a second if you didn't see what I stated. So again, 2020 for a small employer is 100 or fewer. In 2021, it's 500 or fewer. Large is in 2020, 100 or more. In 2021, it's 500 or fewer. So this is a little bit tricky because you might think, well, what does it really matter for the large or small employers in this situation? If you are considered a large employer, you can use the qualified wages only when the employees were not working. So if they were working, you're not going to get this credit if you're a large employer. Now, if you're a small employer, their qualified wages count towards this credit if they were working or if they weren't working. Huge difference here. So again, if you're a large employer and you paid your employees when they weren't working, okay, this credit's great for you. But if they were working and you were paying them, it's a little bit of an issue. So let's keep going. What are qualified wages? It's wages and compensation paid to an eligible employee for that period. You don't include employees who are exempt from Social Security or Medicare taxes. You do get to allocate the amount that the employer paid for health insurance. You don't include SHA contributions. And there's other pieces in here that we can talk about. And you know, this is one of the things where I had a client already ask me to do this, actually a couple, and when we started, and I think it's a good idea to figure out these wages and try to figure out where you fall. I'll get into this in a little bit, but I'm hoping, just similar to how the PPP was and figuring out the qualified wages, that the major third-party payroll administrators will come up with a report that you can easily submit. The SBA loves it. They don't triple check it. And then you put it in your file. And we'll get into how you report this. But I'm really hoping that the qualified wages will be a self-generated report. But here's what it is if you have to generate it by yourself, or if you want to just put together an estimate in your head. Now, this is a tricky one. Wages to related individuals. They've expanded this significantly. So you can't count your kids, your siblings, your step siblings, your parents, step parents, nieces, nephews, aunts, uncles, son or daughter-in-law, father or mother-in-law, brother or sister-in-law. So they pretty much removed all the related people to the owners, if the owners are over 50%, to get this credit. So if I owned, Sal's Auto Body Shop, and I had, all my family members working there because I wanted to get this credit, all those wages would not qualify anymore. So that's a big deal. I'm not saying anybody on this webinar would just hire friends and family to do this. But if it ever crossed your mind or you knew somebody of it, just at least know they're not going to be able to get credit for this. So that's kind of a nice loophole that they close for individuals who are abusing the system. It does suck for a lot of us who do employ family members because it was a family-run business, but it is what it is. Now, here's a question that's a pretty important one. How do these things interact? Because some folks got a lot of different pieces here. So, and the biggest piece that everyone got is the PPP loan. And some folks were able to use the Families First, paid leave sick act. But let's just jump into the PPP loan. You can't consider wages paid from the PPP as qualified wages. You can get both, a retention credit and a PPP loan, but for the time frame when you do your forgiveness to say that, hey, these employees are paid with PPP money, those payments do not count as qualified wages. So that's really the interaction. You can't get credit for paying employees when that wasn't your money that you paid with. That was SBA money. So that's how you really got to look at it. You're not going to double dip. And that's really we can go through all of these, but there's just no double dipping. That being said, for 2021, for everyone who got a PPP2 loan, which I would imagine a lot of folks did who are listening to this, there's going to be some planning that needs to take place there to take maximum advantage of the ERC if you qualify for it. And what I mean by that is with the PPP, I would probably, again, if it works out, use only 60% for payroll and then use the rest for other costs, just so you have maximum qualified wages. In 2020, it probably didn't really matter for multiple reasons. I mean, the main reason is the maximum credit was $5,000 for 2020, and it was easy probably to achieve that at $10,000 of qualified wages, $5,000 of maximum credit per employee. That's pretty easy to achieve. In 2021, that's maybe a little bit harder because that number jumps to potentially 40,000 if you have it for the year. And if you pay people with PPP money, depending on the quarter, it just gets a little bit different. So be very, very cognizant of that when you do the forgiveness for PPP2 if you got it. Oh, no, everything I just said here. So that's something to really, really keep your eye on with the PPP2 forgiveness and so forth. I don't think anyone's done the PPP2 forgiveness yet. I know they're still issuing those. For the PPP1, if you did qualify for the employee retention credit in 2020 and maybe you weren't laser focused on how to do this, there's some exceptions where you can redo the calculation again. I don't think it's going to be necessary for a lot of people, but we can go with that on a case by case basis there if you think you might fall in that category. So a quick recap. Went through a lot of stuff here. So super quick recap. 2020, eligible employer, fully or partially suspended operations, and or more than 50% decline in gross receipts for the quarter compared to the same quarter in 2019. Qualified wages for a large employer, that's someone with over 100 full-time employees. You only include wages paid to employees while not performing any kind of services. For a small employer that's 100 full-time or less, you can include all qualified wages if individuals were working or they weren't. The credit amount is 50% up to $10,000 of qualified wages per employee per year. So that's $5,000 of credit. That's 2020. 2021 was a little bit easier. You're only looking for more than a 20% decline in the current quarter versus the prior quarter compared to 2019. Qualified wages. Large employers now are 500 plus. You only include wages while they're not providing services. Small employer, 500 or less. In 2021, that's consideration. You include all qualified wages. I think most people will fall in the small employer bracket here. The credit amount, and something to pay close attention to, is 70% of $10,000 per quarter, or $7 per quarter, or effectively $28,000 per year. Again, in 2020, it's $5,000 per year. Here it's $28,000 potentially per year, or $7,000 per quarter. Again, a lot more money here in 2021. How do we report? Actually, why don't we all take a quick 2-second break? Just 15 seconds. I'm just gonna grab a quick water, and we'll jump right on board on how we actually report this credit. All right, hopefully everyone got a sip of water. So how do we report this? So in 2020, the only way to do this now is doing a 941X, which is basically a 941 amendment. It's actually pretty simple once you have your numbers. So the mechanics of going through getting this credit are not that difficult, and I believe that your third-party payroll provider should do this for you for free or for some really small charge. The tricky part is figuring out, well, what is my credit? So this should be pretty basic. And what will happen here, you'll just get a refund check, effectively. Now, I think there's probably a way to say, hey, apply this going forward or pushing it forward, but most people will get a refund check. So that's how it is for 2020. Pretty simple process. Same thing here. Now, the one tricky part about 2020 is if you needed to go over multiple quarters to max out that $5,000, and they haven't said exactly how to do this, but rather than amend 2 or 3 941s, you can lump it all to Q4. They haven't issued an exact new 941 cumulative, if you will, but that'll probably come out any day now. So it should be fine. And again, there's no real rush to do this. And I would almost say for folks to wait a little bit. And the reason I say to wait a little bit is, historically speaking, from what I've seen, the rules have seemed to become a lot more beneficial as time passes. And because you have 3 years, and I wouldn't say wait 3 years, but I'd probably say wait a month or two. But I think some things will be cleared up. And at least from what I've seen, it's becoming just more and more beneficial. I haven't seen them make it less beneficial to people who qualify. They haven't taken anything away from anybody, historically speaking. Now, the only thing is, people might raise their hand and say, well, they ran out of money in PPP1. Yeah, they did, but then they refunded it. And when that program was over for PPP1, they had money left over. Here we are in PPP2, and there's still money there. Now, that's probably because there's been some delays and such. But again, I imagine if people qualify and they run out of money, I would hope they'd refund that fund. So you have 3 years here, 941X. Typically, your payroll provider will do that. You probably just have to give them the actual number. In 2021, now this is it's a lot more interesting, a little bit easier. 2 ways to do it is to offset your payroll deposits, your tax deposits. This gets tricky. Again, I just want folks to be careful here. I don't want you not to pay these payroll deposits thinking you're going to get this credit, short pay the government, and then get in trouble. I recommend doing this right, just make sure your numbers are in real time for your revenues, and then doing it on your 941 shortly after the quarter's over. That's how I would do this. I am not a fan of getting an advance and then maybe having to owe something back, and then business goes, gets pretty bad, and then you don't even have the money to pay this back. So just be careful of this. There's another piece the way to do it, and I'm just sharing information with everybody. It's another one. I don't recommend this. This is how you get an advance. So if you say, hey, I know I'm going to be down. I know I'm going to get a credit. Let me get the credit in advance. And this is only available for small employers. You can do that. And it's a form 7200 form. It's a relatively simple form. And you can get an advance on your payroll tax that you didn't even pay. And then you would pay it properly as the quarters come. You just got an advance here. The amount of the advance may not exceed 70% of the average quarterly wages paid by the employer in calendar year 2019. The thought process behind that is you're probably going to have less employees if business is down, which it probably would be for you to qualify for this. So if business is booming, you're probably not going to qualify for this. Again, my recommendation for everybody is to be a little bit conservative here and do this via the 941s exactly when the quarters are over. And that's probably the safest way to do it. Do the calculation. Now the trick again is to calculate these numbers as each month goes by. Stay ahead of the game with your revenues, making sure you're just not doing that very last minute, keeping your books in order. So that way, when March ends, for example, you say, hey, I'm down 20%. Let me pull up my qualified wages. Did I get a PPP2 loan? Okay, that's going to offset a lot of this depending on how I paid for it. I had 20 employees. Here's this, here's that. Hey, I should get a credit of $45,000 or whatever that number is and go from there versus doing it way in advance, not knowing and having to pay it back. Income tax considerations. This should pretty straightforward. And the reason I say that is I think we're all spoiled that the PPP was tax-free from a federal standpoint. I know it's still up in the air on the state, but I think that's something we need to all not get used to, getting tax-free money. This is going to be taxable. It's just what it is. So this will be like income. There's really not much more to be said about this. There's going to be some stuff where it's going to, like, this is more advanced pieces. Like there's aggregation rules. There's, depending on the work you do you provide services to larger employees? So are you just like a little subset and you're actually part of a large company, so you wouldn't qualify? If you get 199A for qualified deductions, something to look at. Again, we talked a little bit about, the PPP2 and making sure you're maximizing that piece. So these are a little bit more advanced pieces that are probably on an individual by individual basis. So just keep that in mind. If you're starting to think hey, I qualify for this, probably reach out. The three things I'd probably say to do is if you think, hey, I think I'm going to be down 20+% a quarter in 2021. One, make sure that's accurate. I'll get into that right now. This is just additional information. It's a quick decision tree, and then I'm going to jump into some things I'd like to share with everyone that are not on this. This is a decision tree, Q1, Q2, 3, or 4. And this is when it talks about controlled members. So this is something I want to touch base on real quick. If you own multiple companies and they all have 99 employees, you got to add all those up, and they're going to look at you as one. So if you own 10 companies and they all have 50 employees, you're effectively considered a large employer. They aggregate all this stuff. You couldn't have spread all your companies out and to make yourself a small employer. Again, that's a huge deal because the small versus large employer, the huge difference there is getting this credit. When you're a small employer, you can get it even if your employees were working. But if you're a large employer, you can't get it if you paid your employees while they're working. You're only going to get it if you paid your employees when they're not working. So that's the biggest piece that this is going to. Same thing here. Again, the biggest difference is large employer versus small employer. And the other difference, which is huge, is you only need to have a 20% drop versus a 50% drop like you had in 2020 there. So we have some Q&A. These were things that were mailed to us earlier. I think most of these were hopefully answered. And then I'm just getting into some other stuff. Do I have to physically shut down locations to be considered? No, you don't. Again, if you have to get reduced hours, if you could only do dine out, you know, certain doctors couldn't service people unless there were specific procedures, all that stuff allows you to qualify. How do I use both? Again, this is different. This is really, really important. If it was me and I got a PPP2 loan, what I would do is allocate 60% of those funds to payroll and the other 40%, because that's the minimum to get it fully forgiven, and the other 40% to leases, cars, and so forth, utilities, and be as close to the 60% or more that it could be, so I can maximize my wages. So that's that piece. Somebody asked, it's a question, what if your customers were shut down? Well, if your customers were shut down, then it probably affected your revenue, which would be the reason you're allowed here. But if your customers were shut down, it doesn't make you, that and alone doesn't allow you to be qualified. Now, if your supply chain was affected, there's certain exceptions there. Is it worth doing the analysis if I have losses or low payroll taxes? I mean, if you got one employee, and you do your books, you know, on the back of an Ackman, and now it's like, hey, I need to get everything in QuickBooks, this, that. Probably not. But if you know you have 5, 10, 4, whatever employees, and I think it's worth it. I think it's easy though too. I want to be clear, like, you know, you may see advertisements. I actually saw someone, a firm that was charging 20% to do this of the credit. That's ridiculous. These services of 941 amendments and all that stuff, that should be done potentially close to free with your payroll provider. You know, with respect to knowing what your qualified wages are going to be, I believe and I hope that some of these third-party payroll providers will come up with those numbers. Again, they were making some pretty clean reports for PPP. I'm hoping they're going to come out with some pretty clean reports for this. Now, with respect to knowing, was I down 20% or not? You know, that's just having your books and records in order, and that's super important. Again, you have 3 years to do this, right? I wouldn't wait 3 years, but you know, make sure those are ready. And the other piece is, you know, you just want to have that ready. Let's just leave it at that. So, anything else here? The aggregation rules, I kind of touched on that already. What is the process of claiming 941X? If you want to amend for 2020, you can put it on the 940 now, or do your regular 940, then go back and adjust it with a 941X. That's probably the way to do it. So it shouldn't be too bad there. This is a disclaimer. I'm going to try to go through some of these questions because they seem to be flooding in right now, and they're all really, really good questions. Okay, if using the employee retention credit for 2021 is a decline based on the same quarter in 2019 or 2020? No, all of this stuff has a base year of 2019. It wouldn't make sense to compare to 2020 because we were in this pandemic the whole time. So you compare this to 2019. Okay, somebody else is asking a question. All right, we have 6 months from the date of funding to apply for PPP forgiveness. That's new to me, actually. I don't think that's true. I think you have 10 months after your cover period, not from the date of funding. But okay, let's just keep going. We're about to get, what about getting the credit for Q1 2020 and only using 2Q 2021 payroll expenses for PPP loan forgiveness? That's interesting. So I think what someone is saying here is, hey, my revenues are down in Q1, right? But I got my PPP loan in Q1 too, and I want the best of both worlds. So why don't I put my PPP money on hold, right? Get those qualified wages in Q1, and then use PPP money in Q2. I don't think the SBA contemplated that yet. But I do believe the covered period for PPP starts pretty much when you get the funding and you have 24 weeks to use it. Now, I don't think it's one of those things that you can just put on hold and shelf it and say, well, hey, I want this to start 12 weeks after I got it. So that's a tough one, to be quite honest with you. That's a very interesting one. So maybe wait on that with some additional Q and A. At the end of the day, you can probably sit a little bit and wait, wait a little bit for the forgiveness as well. So going from that. Someone asked, we have 250 employees, but only 30 are full-time, the rest are part-time. Are we a small business? What year are you referring to? You're referring to 2021. Would you consider a small business? Yes. In 2020, have to look at that. I think those so many part-time employees would get you over 100 for 2020, but for 2021, you would be considered a small business. So that's that one. And again, 2021 is a time where there's a lot more money there. Again, it's $7,000 per quarter maximum per employee for the whole year. So that's $28,000 maximum per employee. Now, like I said, it's really hard to get the $28,000, right? If you got a PPP loan, you probably use some of those qualified money. Now, is it still possible to get the It's still possible to maximize and get $28,000 even if you got the PPP loan? Yeah, it is, because the PPP loan, you start excluding people at $100,000, right? So that means they make $25,000 per quarter. Let's just use John Smith, for example, who makes $100,000. He's an employee, makes $100,000. The PPP will only let you use $8,000 per quarter. Now, depending on how you time that out and the number of employees you get, and if you're at the 60% mark, you can probably maximize the employee retention credit and the PPP forgiveness there. Again, it's just math and just figuring out how to time it properly. So the person with that question, I would say put all your facts on paper and drop in all the numbers. There's quite a few other questions here, but I think we're actually out of time. But I want to leave you with this. get your books and records in order. Don't pay anything ridiculous to file this stuff. Your payroll provider should do it for free. That's huge. And be just careful of getting a huge advance, because these are the kind of things where you're hanging on to government money that may not belong to you if you do this the wrong way. So I would just have your good facts and circumstances in front of you. If you make a mistake because of one reason or another, but not just to get an advance, spend it and not be able to pay it back, that's the last thing I want anyone to ever do. And that's about it. My name is Sal Cura, Capita. Please feel free to email us if you have any questions. This is our phone number. This is the email address. We'll get back to you as soon as we can. And we'll go from there. Thank you again, everyone, and have a great day.